Welcome, dear traders. It's me, Kate Stichina, and you are watching a recap of the Asian session. Stock markets kicked off Tuesday with a sell-off. Japanese stocks incurred the largest losses, and the Australian equity market was also down amid pessimism on Wall Street. The US stock market may notch the biggest annual losses since 2008. Wall Street experienced a steep drop 14 years ago due to the global financial crisis. This is why investors are so concerned about further monetary tightening, and the Fed and other major central banks are strongly committed to a hawkish stance. As a recession risks are mounting, traders are getting rid of risk-sensitive assets. The coronavirus situation in China is also quite alarming. There was a surge in new cases, and this news overshadowed the statements of the Chinese government about financial aid for the economy next year. As the trading volumes are low ahead of the long holidays, there could be sharp price swings. Overall, there will be many pitfalls for traders holding long positions on risky assets in January 2023, as well as in December 2022. The same can be said about dollar bears. The trajectory of the greenback is quite similar to stocks. Recession fears are the main catalyst for a downward movement. Market sentiment turned sour on Wednesday last week. Back then, Fed Chairman Jerome Powell warned about further rate increases even if the economy contracts markedly. Yesterday, several Fed officials made hawkish remarks, which clearly did not add optimism to markets. For this reason, investors are revising their portfolios in favor of the US government bonds. In the Asian trade, the 10-year and 2-year bond yields climbed significantly. Moreover, as seen on the chart, a rather sharp jump occurred in the morning. As a rule, the US advanced amid rising US treasuries. However, it dropped to 104.20. It was drifting lower versus its main rivals due to strong yen and the Swiss franc. This is rather unusual to watch its decline, given that the US dollar has been steadily growing throughout the year amid aggressive tightening and geopolitical tensions. Apparently, market uncertainty shattered the strength of the currency leader. The US dollar slid into the bearish channel of 103.90 and 104.80. As we discussed yesterday, the Bank of Japan was widely expected to keep its monetary policy parameters unchanged. However, yesterday, the Prime Minister hinted at the possible revision of the 10-year accord with the Bank of Japan. Speculators ignored his statements. Nevertheless, Bank of Japan policymakers managed to surprise traders. The watchdog kept 10-year yields and the key rate around zero. At the same time, the regulator is well aware of the risks for the bond market. It now allows Japan's 10-year bond yields to rise to around 0.5%, up from the previous upper limit of 0.25%. This move triggered the largest gain in the 10-year Japanese bond yield since 2015, and the Bank of Japan's decision has had a tremendous impact on forex. The yen's sharp jump surprised all market players, especially given the widening rate gap between the Fed and the Bank of Japan, and the dollar-yen pair sank by more than 2%, reaching a 4-month high. A rally of the yen was so strong that it pushed the US dollar down across the board. The pair grew to 132.40 at the start of the Asian session. It was moving in the range of 132.10 and 137.5. The quotes are likely to break below the support level of 130.40 and decrease to 127.40. Otherwise, their growth will be limited by the resistance levels located at 137.40 and 138.00. The Australian dollar also made an attempt to climb versus the US currency. It tried to break through the resistance level of 0.6720. However, the Aussie had to to retreat. In the Asian session, it was trading below a 3-month high of 0.6893 looked last week. The Aussie slid into the downward range of 0.6629 and 0.6743 after the publication of the December meeting. They showed that the regulator could stop rising rates in the near future. Naturally, this is bearish for the Australian currency. The AUD USD pair tumbled to 0.6689. Its movements are quite volatile. The Aussie rises amid news from China, but it's unable to show steady growth due to the risk of sentiment. And that's all for now. Stay tuned and keep close tabs on the market developments with us. See you soon.